This is RKrivo, and today's video will cover one of the most critical aspects of trading, managing one's emotions. And in this case, that emotion is greed. And I just want to let you know that I will continue drilling down the charts, but from time to time, I'm going to cover some topics that I consider to be critical to one's trading success, such as the one today. Lately, I've been getting a lot of emails from traders about why they are losing so often. They tell me they follow their plan, their trading strategy, but each week or month their account is getting smaller. And in the vast majority of these instances, this can be traced back to the trader's mindset, the emotions that kick in when they're putting on and managing a trade. Now, many traders, especially in the beginning, are in search of that holy grail, an oracle of trading secrets in the form of a strategy, kind of a magically predictive entry signal that leads to an avalanche of winning trades for the remainder of their trading career. Their feeling is, once I know that secret, I will be invincible. Markets beware. Now, while having a strategy is important to be sure, it is nowhere near as important as the trading mindset of the person doing the trading. If there is truly anything magic about trading, it's going to be found between the ears of each individual trader in their mindset as they relate to the act of trading. If you have not viewed them as yet, I would direct you to the two Psychology of Trading videos on this channel. They will begin to point you in the direction of developing the proper mindset that you need to succeed as a trader. Now, the topic of this video is but a single human emotion that kicks in when, as I mentioned, many traders begin to trade. That is greed. And for the record, the vast majority of the content in this video, almost verbatim in many cases, is taken from an article that I did a while back on the topic of greed, as it was inspired by the character of Gordon Gekko from the original Wall Street movie. So for those of you who would rather listen to a video than read an article, this is for you. Let's begin with those pesky but all-important risk disclosures. And here we go, trading foreign exchange, lots of risk. Only trade with risk capital, money that you can afford to lose. High degree of leverage, it can work both ways. Content provided herein is for informational and educational purposes only. Okay, let's get started here. In the 1987 movie, Wall Street, Michael Douglas' character, Gordon Gekko, pictured here, gave his famous or infamous, depending on how you want to look at it, "Greed is good" speech. And the gist of the speech was that greed for life, greed for money, greed for love, greed for knowledge, has, in Gordon's opinion, caused the upward surge of mankind. Therefore, greed is good. Now, the merits of that statement have been argued since Douglas first uttered it, and I'm not here to defend it one way or the other. My point is to relate how greed in excess, greed as the prime motivator in a trader, can lead to defeat. The ultimate defeat, of course, being blowing up one's trading account. Full disclosure here, just so you know that I have had up close and personal run-ins with greed, allow me to relate a story. Early in my trading career, I made a classic rookie blunder. I put on a trade that was way too big, seconds after NFP, non-farm payroll, when the market was way too volatile, wanting to make 20 pips, only 20 measly pips on the pound dollar. If this trade worked out, I thought, it's going to make my trading week, maybe my trading month. What a genius idea. And what a genius I was to think of it. Yeah, a little full of myself there. But, well, the trade made it to plus 17 pips and stalled. But because I was guided by greed and being way too stubborn as a result of the greed, I held out for the full 20 pips. Boy, was I going to show the market a thing or two on this trade. End result, I lost 23 pips. It never got back to plus 20. I know, losing 23 pips, it doesn't sound like much, but believe me, I had also been trading, as I mentioned, way too large. So it wasn't a lot of pips, but it was a lot of dollars for me at that time. And my personal lesson on greed, I learned it the hard and expensive way for sure. Here are two quotes on the emotion of greed from traders that I have worked with. "Greed has cost me more than anything else. How can I control greed? That has been my #1 problem in trading." So how do we, mere mortals that we are, go about controlling this all too human emotion of greed? First of all, if you can identify at all with either of those quotes, it means that you're aware that greed is negatively impacting your trading, and that recognition is a big step toward resolving the issue. To keep this detrimental emotion in check, having a definite trading plan written out, kind of like a blueprint, is going to go a long way toward eliminating the problem. Keep the plan nearby where you can reference it prior to placing any trade. The plan will be a strategy that you have tested and one that has put pips into your account over time. Now, by this, I do not mean positive pips on every single trade, since every trade is not going to be a winner. Even if you're doing everything right, every trade is not going to be a winning trade. But overall, the strategy has been adding pips to your account over time. Now that we have the trading plan nailed down, we must only take trades that fit that plan precisely. We want to execute our trading plan flawlessly. If the trade does not measure up in one area, we don't take the trade. It's as simple as that. We only want to take higher probability trades that are based on our predetermined plan. This is going to eliminate randomly jumping into trades based on emotion because, well, that chart setup kind of looks okay, or I just like to be in a trade, that kind of syndrome. Now, the next steps here are based around money management principles. Never put more than an absolute maximum of 5% of your trading account at risk at any one time. This means no matter how many trades you have open at the same time, 1, 5, 10, 20, if they all turn out to be losers, that can and will happen, you will not lose more than 5% of your trading account. Keep in mind, when it comes to risk, less is better than more. So 3% risk is better than 5, 1 is better than 3. You get the idea. Also, always trade with at least a 1 to 2 risk-reward ratio in place. This means if you're risking 50 pips on a trade, you should be looking for at least 100 pips of profit on that trade. Lastly, once the trade has triggered with stops and limits in place, I cannot emphasize this next point enough. Leave it alone. Leave it alone. Just let the trade play itself out according to the original parameters you put into place prior to being in the trade, when your emotions were non-existent. Take a minute and let this sink in. When you were looking at the charts, checking for trends, support and resistance levels, relevant fundamental announcements, things like that, you were totally without emotion. You had no skin in the game at that point. The plans that were put together at that time were based on facts and facts alone. Once the trade is entered, however, emotions can shift into high gear as money, your hard-earned money, is on the line. Now, making changes to a fact-based, emotionless, no fear, no greed, trading plan based on moment-to-moment emotional shifts induced by price action in the market is not a prudent way to trade. It's a deadly way to trade. Managing and dealing with the emotion of greed is not something that's going to be resolved over the next couple of trades. However, by being conscious of how greed can negatively impact your trading and implementing the former ideas and steps as part of your trading regimen, you will be taking positive steps toward the goal of greed-free trading. Thanks for listening, and email me with any questions at RKrivoFX@gmail.com.